that how do you see that the global EV market is evolving, and specifically I see that a lot of traction coming in Europe, USA and China. China obviously leading the pack. What are the growth drivers, inhibitors of the EV adoption? So Terry, and something like that also coming into this is coupled with this is how the foreign OEMs will view the Indian EV market. What are the challenges and opportunities they identify here? And you're up to you now.
Sure, thanks very much. Sanjeev, maybe just to break down that first question a little bit into how is the market evolving, and then what are some of the drivers and some of the inhibitors. I mean, I think in terms of how it's evolving, I mean, let's just start with some of the numbers. Globally, EVs, plug-ins have been just over 2 million, probably going to 3 million at the end of this year, right? And so on a share of market, that's probably going to a space now that's between 3.5% and 4% of total new vehicle sales. I'm talking here about the four-wheelers. So we're seeing growth. We're seeing growth in EVs outstripping ICE in COVID times. And I don't think any of that's particularly surprising. I mean, you mentioned the three regions, China, Europe, US. I mean, for sure, China really has played a leading role. It's half of global sales. It's really come to what we think of as the tipping point. Usually 5% share for EV is when we see markets like Norway in the past, where we see markets really take off. So China is expected to pass the tipping point in 2020 and exceed 5% of new vehicle registrations being plug-in. Europe is also likely to jump above 5% this year, and you'll see a lot of that you've seen it already this year about if you're looking at sales by market, but that's so Europe is definitely making a big move. It's largely regulatory driven, but we'll talk about that in just a second. US is a little bit of a laggard compared to the other two, and US is really in that 2 to 3% share of the market. So we can see in terms of those three regions, two of them have really reached the tipping point, and really China is setting the rules of the game, so to speak, starting with drivers and inhibitors. And so when we think about drivers and inhibitors, we typically break it into regulations and then into demand stimulus and supply. And so if I think about where we are on regulations, just as an example, I mean, China with the China 6A and then 6B, that's their CO2 grams per kilometer. They were very aggressive in going to a regulation of 70 grams per kilometer. And are likely to, and will be going to, they've been consistent with their policy, they'll be going to 50 grams. So the only way you can reach those emission regulations as a manufacturer is if your sales mix includes battery electric. And so that's really how they've set the tone at a national level with some very clear regulations, some very clear policy that affects public and private sector. Europe played catch up. Europe has modified their Euro 6 standard as we know, and so the regulations in Europe now at the end of 2020, manufacturers need to have a blend of 95 grams per kilometer, and so that's what's driving this big push in plug-in vehicles for Europe. And we'll be seeing a lot of that in the news. So basically all the major markets now in Europe are above 5%. Many of them are in very healthy double digits. So obviously the Scandinavian markets led this, but the Netherlands, even Germany now is getting into approaching double digit penetration numbers in the course of this year. So there's a lot of movement in the EU. Should not be a surprise. It's regulatory driven, and so manufacturers are really doing this in order to avoid massive penalties. And so that really leaves us. We talk about these three regions, but to me, it leaves us with the rest of the world. And in my line of work now, as whether it's in e-mobility or it's in startups, when I talk with there's over 200 new four-wheel OEMs. And when you talk to them individually, you can see that the rest of the world, and India, of course, as part of that, as one of the largest markets as part of that, is not on anyone's radar screen. So having said that, there are many rest of the world countries that are poised for growth, and some have already passed the 5% barrier. UAE, just as an example, in the Gulf states, I mean, the UAE will pass 5% EV penetration this year, if you can imagine. Thailand also was very, very quick with their EV policy, and it's actually a good benchmark for other markets in, let's say, the EMEA region or in South America, as they look at, what do they want to do. So we talk about regulation, stimulating demand, and then the supply side. So stimulating demand, I mean, to me, Norway's always been a really good example of how they stimulated demand. In the early days, Norway's incentives for the consumer peaked at 45% of the purchase price. Right. So if you can imagine, they really went out there with a package, a blended package of incentives at purchase, incentives in the annual cost of the vehicle, and incentives at a municipal city level for use of the vehicle. So basically not cash, but cash substitutes, whether it's parking or it's driving lanes or those kinds of things. So I think those are really good models to learn from. And then on the supply side, I mean, we all know about the traditional players in the business and the ICE business, but really these new companies are coming online now in this time frame. Between now and 2023, there's an enormous wave of new EV products across all price points that will be coming to market. And so brands that we haven't really yet talked to, that aren't part of the daily conversation, will be top of the line, or will be top of mind as we start moving forward. So I think the supply side is also crucial, because there's been probably a lot of talk about the EVs, not necessarily the availability and the breadth of supply, and I think that's changing very, very soon. So maybe just to summarize, I mean, to me, I would say what we're seeing from a global perspective, I think this is probably very analogous to the iPhone, the smartphone, dumb phone situation at the start of 2000, 2001. I think it's very similar to that. We really are seeing the potential for a massive shift in what the vehicle is, what mobility is, how do you choose to own mobility? It's no longer simply an outright purchase. There's so many other options to use mobility on demand when you need it. Mobility in its different forms, whether it's 2-wheel, 3-wheel, 4-wheel. So I think those are all very, very ripe to disrupt the total purchase chain. The last thing I would say is that the opportunity, I think, what we're seeing in the evolving trends, really, there's a big opportunity to disrupt the supply chain. When you think about the purchase funnel, and even the purchase funnel that we saw from Ariman just a few minutes ago, I tend to now look at electric vehicles more like a SaaS model, right? Not like a traditional purchase funnel that ends when you take delivery of the vehicle, but a SaaS model where, software as a service, where you really start putting in a lot of effort with the onboarding, with the first 30 days of use. So you really focus on helping the customer be successful with their early use, and then their continued adoption of what the vehicle offers. And the fact that you can now use this platform for over the air is a tremendous opportunity to go direct to customer. So I think if you're not going direct to customer in this space, I think you're missing out on about 20 points of margin that is really going to be hotly contested in the pricing structure and the overall business model going down the road. So to me, massive disruption on all levels, but really a big wave coming on supply, and then a fundamental change in how we think about using and consuming and interfacing with this mobility?